The trading mistake that destroys accounts. There is one mistake that quietly wipes out more trading accounts than bad strategies, bad timing, or bad luck combined. New traders don't feel it happening until it's too late, and experienced traders can fall into it the moment they lose focus. And here's the dangerous part. This mistake feels logical. It feels like you're doing the smart thing. It feels like you're just trying to protect your money. But in reality, it's the most destructive behavior in the entire trading world. Today, I'm going to break it down with real examples, real consequences, and the one rule professional traders follow to avoid it completely. The most dangerous trading mistake is revenge trading. It happens the moment you take a loss and your brain refuses to accept it. You tell yourself, let me just get my money back, or I'll only enter one more trade, or I can fix this if I move fast. But what you're actually doing is trading emotions, not signals. You're trading anger, not strategy. You're trading to erase the pain, not to make a smart decision. Revenge trading destroys accounts because it creates a loop. Loss, anger, impulsive trade, bigger loss, panic, and then even more impulsive trades. It's the fastest way to go from calm to catastrophic. This isn't a weakness. It's biology. 3 psychological triggers fire instantly after a loss. First, loss aversion. Humans feel losses twice as strongly as wins. A financial loss activates the same fight or flight system that responds to danger. Second, the break-even trap. After a loss, your brain fixates on getting back to the starting point, even though markets don't care about where you began. Third, the illusion of control. When a trade goes against you, you feel powerless, so you try to regain control with bigger, faster, riskier decisions. That's how calm investors become desperate gamblers in minutes. Here's how a small loss becomes a disaster. A trader starts with a $500 account. They lose $200. That emotional shock triggers urgency. They double their position size to make the money back faster. Now they're entering low-quality trades with no stop loss and no confirmation. A second loss hits. Their account drops from $300 to $150. Panic takes over. They start clicking buttons, opening oversized positions, reacting instead of thinking. By the end of the day, the account is blown. Not because the trader lacked skill, but because the trader lost emotional control. Professionals say, your account doesn't get destroyed by one loss. It gets destroyed by what you do after the loss. This is the key difference between beginners and professionals. Beginners trade to be right. Professionals trade to follow rules. One group wants emotional comfort. The other wants mathematical consistency. Professionals know your next trade should never be influenced by your last trade. Each trade must stand alone. You never make back money. You only make smart decisions based on data. This is why professionals survive volatility and why beginners get wiped out by it. There is one rule that protects your entire account. After any emotionally charged loss, stop trading. Not stop for an hour. Not take one smaller trade to calm down. Stop completely. You can't outsmart your own biology. Your brain needs time to reset. Your strategy needs to recenter. Your emotions need space to stabilize. Some traders walk away for a day. Some walk away for a week. But none of them keep trading while they're angry. If you want to protect your account long term, follow this 3-step protocol. First, set a maximum daily loss limit. Professionals often use 2% of their account. If they hit that limit, the day is over. No excuses. Second, use a pre-written checklist before every trade. Real traders never rely on feel. They rely on criteria. trend direction, market structure, risk to reward, volatility, entry confirmation, stop loss placement. If you can't tick every box, you don't open the trade. Third, force a cooling off period after any loss that feels emotional. Even 10 minutes can save an account. 1 hour can save a week. 1 day can save you from blowing up and quitting trading altogether. Revenge trading doesn't feel like revenge. It feels like urgency. It feels like fixing a mistake. It feels like taking back control. But it is none of those things. It is your mind abandoning logic. Trading is not just strategy. It is discipline under pressure. It is emotional control when money is on the line. Most traders lose not because the market beats them, but because their emotions beat them. If you master this one mistake, you already stand above most traders. A loss is only dangerous when you refuse to accept it. Accept it, learn from it, and stop trading for the day. Protect your capital. Protect your mind. That single discipline separates those who last from those who disappear quietly after one bad day. If you found this helpful, subscribe, like the video, and join me for more straightforward, no-nonsense investing and trading guidance.